The market moving in a fairly narrow band. Couple of stocks which look interesting right now. One is First Source. If you pull out the intraday chart of First Source and even Subek, so a couple of these stocks have moved. So there's quite a bit of traction that you're seeing in individual mid-cap names, but for overall Nifty, it's been a bit flat. Lalit Nambiar now joins in, fund manager at UTI Mutual Fund. Lalit, hi, good morning. The big question from here on, which sector do you think can provide leadership to the market? This market has been lacking any kind of leadership from big sectors. Do you think there's one or two sectors that can do that?
I don't think in the immediate term the market is going in any particular direction. So I wish I could give you a clear answer on that. What we really are weighing in on are auto, cement, which we've talked about for many times, and IT, for instance. And I think that's a good place to be. Partly because of what we've been talking about for many months now, about the investment cycle or the business cycle. And IT, of course, gets tailwinds from the situation with respect to the currency, as well as some traction which you're seeing in mid-cap IT now. As operational situation settles down, the churn comes down in terms of employee churn. So that's where we are looking at putting our money.
Okay. Lalit, good to see you in today. How would you play the pharmaceutical sector? Because each story is so different, but the common factor seems to be the risk from the US FDA for most export-oriented pharma companies. What's your approach towards that?
I think I lost the sound.
Okay, Lalit, is my voice reaching you?
Hello?
Is my voice reaching you?
Yeah.
Okay.
So what is the approach for the pharma?
Yes.
In my opinion, US FDA is something we want to live with. Basically something we've got to get used to. I think Indian managements are getting used to it. And I think it's par for the course with respect to investing in these companies. What one must see is whether there is enough learning at the ground level. When you visit plants, etc., you get a sense that people on the ground are also get a feeling that the quality and the attitude towards quality has to improve dramatically. But that's more a philosophical and a cultural thing, will take some time. Apart from that, I think it's better to focus on what the company is doing in terms of its ANDA pipeline and its efforts in the US and the solidity and management track record. Because these quality issues are going to come up, and it's going to be something you have to accept and continue to live with.
What makes you overweight on cement, Lalit?
So I think we've been talking about the investment cycle for some time, the business cycle. So it's a question of being early into that and playing the cycle and allowing for that tailwind to come in. It's not cement per se, it's a broader theme with respect to individual opportunities under the umbrella of a business cycle. So when you have at some point in time the economy turning around, you should see some of these companies under this broad theme doing well. So cement is part of that.
Okay. How would you approach banks?
So I think there are some systemic issues there, especially with respect to PSU banks, but I think the government is addressing them. You've seen a couple of experiments in PSU banks. We all hope that it will work out well. So that's as far as PSU banks are concerned, but it's a wait and watch to some extent. I think the larger PSU banks probably are something which one must keep in mind. With respect to the other private sector banks, I think some systemic issues, some structural issues there in terms of some large assets which may have gone bad. And I think that will probably require the market to be a little cautious, wait it out, figure out how that's going before it really wants to go in deeper.
Okay. Any particular sectors where you have complete avoid right now?
I think real estate continues to be an avoid.
Okay. How would you, Lalit, approach a strategy towards the markets to be more stock specific and more broader market oriented as opposed to your typical blue chip choices? For example, look for specific ideas, and you don't have to talk about stocks, but say something like a Marksans Pharma has given returns of around 66% on a year-to-date basis, as opposed to say a Sun Pharma, which has declined 20% on a month-to-date basis. Do you think that maybe the focus should be more stock specific ideas as opposed to just a blanket sectoral allocation?
So there are 2-3 ways of doing this, but it depends on your philosophy. And if you believe that you first need to take a view of what is happening top down, you can't ignore the top down. and then you can look at filters for individual companies and trying to see of the lot which one you'd prefer. So among the names mentioned, for instance, one could be a very large company which has a very well established track record, a very good management from whatever the rest of the market has seen. It has wide institutional ownership, and the other may not be meeting those criteria. So why those stocks did how they did and is very difficult to explain. But in some cases it's also a function of float and size. So return by itself doesn't give you much of an idea of what's actually happening in the stock. You probably need to look at the free float and possibly technical factors which are driving it rather than genuine underlying fundamentals.
Okay. Fair enough, Lalit. We'll leave it on that note. Thank you very much for joining in and talking to us.